Level 1. The borrower. You are not in the hierarchy yet. You are the reason it exists. You need money. Not a small amount. Or maybe it is a small amount, but it's an amount you cannot get anywhere else. Your credit score is a number that banks use to tell you no. You don't have collateral, you don't have a cosigner, you don't have family who can help, or you've already asked them and the answer was no and the relationship is now awkward in a way that hasn't healed yet. You have a bill due, an eviction notice, a medical expense, a debt to someone else that has become urgent in a way that makes a new debt feel like a solution. This is the logic of financial desperation, and it is not irrational in the moment, even when it leads somewhere bad. Someone tells you about a guy. Not in those words. The words are more casual. I know someone who can help. He's not a bank. He doesn't ask a lot of questions. He can have the money to you today.
Today is the word that matters. The bank takes 2 weeks and says no at the end of it. This person says today. You borrow $500 or $1,000 or $5,000. The interest rate is not presented as an annual percentage because if it were presented that way, 300%, 500%, sometimes more, you would understand what you were agreeing to. Instead, it is presented weekly. 2 points on the dollar. 2% a week sounds manageable. It is 104% annually. You don't do that math in the moment. Almost nobody does. You are given the money in cash. There is no contract, no paperwork.
The absence of paperwork means the only thing enforcing this agreement is the lender's willingness to use methods that paperwork would document. You understand this dimly. You push it to the back of your mind because the bill is due. The first week, you make your payment and everything is fine. The second week, you make it and everything is fine. The third week, something happens. It always does because the kind of person who borrows from a loan shark is the kind of person whose life contains things that happen, and you can't make the full payment. The interest rolls over onto the principal.
The number you owe is now larger than the number you borrowed. You have entered a mechanism that is specifically designed to keep you inside it. Not out of cruelty exactly, out of business logic. A borrower who repays is a transaction. A borrower who can't repay is an income stream. You will spend the next months or years working to get out from under this number. Some people do. They scrape and sacrifice and pay it down and walk away having learned something expensive. Some people don't. The debt grows faster than they can pay it. The man who gave them money becomes a man who appears at their door. The conversation at the door is not the same as the conversation where the money changed hands. You are level 1 because you are the foundation. Every level above you is built on the fact that people in your position exist. Will always exist and will always need money faster than legitimate systems can provide it.
Level 2, the collector. You work for someone. Your job is simple in its description and complicated in its execution. You go to addresses, you knock on doors, you have a conversation. You leave with money, or you leave with a clear understanding of when the money is coming, or you leave having communicated, through whatever means the situation requires, that not having the money is not an acceptable long-term position. You are recruited because of what you look like or who you know, or because you needed work and someone trusted you enough to give you this kind. The qualification for the job is not intelligence or education. It is reliability and physical presence and the ability to make another person feel, without necessarily doing anything, that the consequences of non-payment are real. You visit borrowers on a schedule, weekly, usually. You know your route the way a postman knows his, except the deliveries go in the other direction and nobody is happy to see you coming. Most visits are uneventful. The borrower has the money changes hands, you record the payment in a notebook or your phone and move to the next address. This is the job on an ordinary day. Some visits are not ordinary. The door doesn't open. You knock again. You can hear movement inside. You speak through the door in a voice calibrated to carry through wood without carrying to the neighbors. You note the address. You come back tomorrow. The door opens and the person inside is crying before you say a word because they've been dreading this knock all week. You've learned to manage this.
Sympathy is not the job. Understanding is not the job. The job is the payment or a credible explanation of when the payment is coming. Occasionally, less often than television suggests, more often than you'd prefer, the situation escalates. Someone gets loud, someone gets physical. You are equipped for this in various ways, depending on the organization you work for and the laws of the jurisdiction you're in. What happens in these moments is not something you discuss in detail. It is understood. You make a flat fee or a percentage of what you collect. The percentage model is motivating in a way the flat fee isn't. When you're working on commission, every door you walk away from empty-handed is money out of your pocket. You are exposed. You are the face of the operation, the person the borrower sees, the person who could be identified, the person who gets arrested if a borrower calls the police or a neighbor reports what they saw. The people above you are not exposed. That is a structural feature, not an accident. You don't have a contract. You don't have employment rights. If something goes wrong on a visit, you handle it yourself. The organization is not officially aware of your existence in any way that could be audited.
You are paid in cash. You spend it quietly. You tell people you work in debt recovery. Some of them know what that means. Some don't ask.
Level 3. The street lender. You have money of your own now, or money fronted to you by someone above you in the chain. You put it on the street. This means you find borrowers. You identify people in your neighborhood, your network, your social circle who need money and can't get it through normal channels. You offer it to them. You set the terms, you collect the payments. The spread between what you lend and what comes back, minus whatever you owe upward for the fronted capital, is your income. You are running a small business. It is illegal and informal and operates entirely on trust and the implied threat of what happens when trust is broken. But the underlying mechanics, borrow at one rate, lend at a higher one, manage the margin, are the same mechanics every bank in the world runs on. Your customers are people you know. This is important. You are not lending to strangers. You are lending to the woman 2 streets over whose husband left, to the man who runs the shop on the corner and had a bad month, to the kid who owes someone else and needs to cover it fast. You know their situations. You know their families. You know where they live, where they work, where their kids go to school. This knowledge is your collateral. You don't need a credit score because you have something better, full visibility into the life of the person who owes you. They know that you know. That knowledge shapes the repayment dynamic more than any contract would. You carry a book, a physical record or a mental one, every loan, every payment, every amount outstanding. You know these numbers the way other people know their own bank balance.
Accuracy is not optional. The money you're managing belongs partly to someone above you, and discrepancies travel upward and have consequences. You have maybe a dozen active borrowers. Some are reliable, they pay every week without drama, they've been borrowing from you for years, the relationship is almost cordial. Some are problems. They pay late, pay short, disappear when money is tight. Managing the problem borrowers takes most of your time and most of your stress. You do your own collecting. This is the part of the job that has no good days, only less bad ones. You know these people. You've eaten in some of their houses, and you're standing at their door asking for money they don't have with the implicit weight of what happens if they keep not having it. You make decent money when things are working. The problem is that things are not always working. A borrower who disappears costs you. A borrower who genuinely cannot pay, no matter what pressure is applied, costs you. You absorb these losses unless you can recover them, which is not always possible and not always clean. You are 100% visible in your community. Everyone knows what you do, even if nobody says it in those words. This visibility is both your power and your vulnerability. The police know the neighborhoods where this happens. Occasionally, they move on it. You think about this the way people who work dangerous jobs think about accidents, abstractly, until suddenly it's not abstract. You have a phone that rings at hours that aren't business hours. You answer it. That's the job.
Level 4. The enforcer. You are not a collector. The distinction matters. A collector visits borrowers who are behind on payments and applies social pressure, presence, conversation, the unspoken weight of implication. You visit borrowers after that has already failed. You are the consequence. You were not built for this job by circumstance. You are here because of a specific combination of physical capability, temperament, and the particular moral flexibility required to hurt someone over a debt as a professional activity. Not everyone has it. You do. This fact about yourself is something you've made a kind of peace with. You work for multiple lenders, typically. You are a freelance specialist. A lender calls you when a borrower has stopped responding to normal collection and the amount outstanding justifies escalation. You handle the escalation. You are paid per job. You know how to hurt someone in ways that are painful and frightening without causing the kind of damage that generates medical reports and police involvement.
This is a skill set with a learning curve. You have learned it. You don't discuss the curriculum.
You know how to damage property in ways that communicate clearly without being traceable. A window, a car, something that says we know where you are and this is a preview without saying anything that could be repeated in a courtroom. Most of the time, your involvement doesn't require physical action. Your reputation precedes you. A lender mentions your name. A borrower who has ignored 3 collectors suddenly finds the money. The threat operates more efficiently than the act, which suits everyone because the act has complications. You have been arrested. The charges didn't stick, or they were reduced, or the victim declined to testify, which happens more often than the legal system publicly acknowledges. Victims of loan shark violence rarely make good witnesses because the loan in the first place was illegal, because they are afraid, and because the people around them are afraid. The legal system's leverage in these situations is limited. You don't borrow money. You don't lend it. You don't involve yourself in the financial mechanics at all. You are a service provider. What you provide is fear, and its occasionally necessary physical expression.
You are paid well for a job that most people cannot do. You spend that money quietly. You don't think about the people you visit after you've left, or you've taught yourself not to, or you've made an argument to yourself about their choices and your role in the consequences of their choices that you find mostly convincing.
Most nights you sleep fine. Some nights you don't know what it is that won't let you sleep.
Level 5, the book runner. You manage other people's money, not your own operation. Someone above you has provided capital and you have deployed it on their behalf across a network of street lenders who answer to you. You are the middle management of an illegal lending operation. The job sounds mundane. At this scale, it mostly is. You oversee 5, 10, maybe 15 street lenders. Each of them has their own borrowers, their own book, their own collection problems. Your job is to manage the managers, to make sure the capital is moving, out to borrowers, back in with interest, cycling continuously through the system, generating returns. You track the aggregate. Every week, the numbers from each lender come to you and you reconcile them against what should be there. When the numbers don't add up, a lender who is skimming, a lender who has a bad book and is hiding losses, a lender who has simply had a run of bad borrowers, you identify it. What happens next depends on the situation. Some problems are solved with a conversation, some with a reduction in the lender's advance. Some require involvement you'd prefer not to arrange. You have access to significant capital. The total loan book you oversee might be worth $500,000 or several million, depending on the organization. This money is not yours, a fact that concentrates the mind considerably. You are responsible for it. If it walks, through theft, through uncollectible debts, through your own bad decisions, the accountability flows upward to the person who trusted you with it, and then back down to you in a form that is not a performance review. You launder, in a modest way. The cash coming through your operation needs somewhere to go. You own something, a small business, a car dealership, a market stall that can absorb cash revenue without looking implausible. The volumes at your level are manageable without sophisticated structures. You keep it simple. You think about legal exposure constantly. You are far enough from the street-level activity that direct observation of criminal acts is rare.
But you handle cash, you direct lenders, you occasionally arrange collection escalation. Each of these is a thread that, if pulled by the right investigator, leads somewhere you don't want to go. You pay a lawyer, not because you've been charged with anything, because when you are, you want someone who already knows you.
Level 6, the operator. You run an organization, not a crew, an organization. Multiple book runners beneath you, each managing their own network of lenders. A territory that might cover a city, a series of neighborhoods, an ethnic community spread across a metropolitan area. You are the CEO of an illegal financial institution, and the responsibilities of the role are more similar to legitimate management than most people would assume. You think about capital allocation, how much to deploy, at what rates, into which neighborhoods, through which lenders. Risk is not uniform across your operation. Some areas, some demographics, some types of borrowers are more reliable than others. You have data, not in spreadsheets, in your head, in the pattern recognition of years, that tells you where the good business is and where the losses come from. You think about personnel, who is trustworthy, who is ambitious in a way that's useful versus dangerous, who is becoming a liability through addiction or carelessness or too much visibility. Managing people in an illegal organization is harder than managing them legally because the tools are different. You cannot fire someone cleanly. Someone who leaves with grievances and knowledge is a risk. The human resources problems of your world have solutions that HR departments don't have access to. You have legitimate cover, a business, several probably, that employs you on paper and generates income you can account for. Your visible lifestyle is consistent with this cover. You are not flashy. Flashy men at your level are men who are building a prosecution file without realizing it. You interface with other criminal organizations.
The loan sharking business overlaps with other businesses. Gambling, where the losers need credit, drug distribution, where cash flow gaps need bridging, extortion, which is a collection business by another name. You have relationships with the people who run those businesses. Some of those relationships are cooperative, some are competitive, some are complicated in ways that require careful management. Law enforcement is aware of you, not in a way that has produced charges, not yet, but you appear in investigative files. An analyst somewhere has mapped your organization on a whiteboard. Informants at lower levels of your structure have mentioned your name. You think about this the way people think about their health after a certain age. You know the risk is there.
You manage what you can manage, you avoid the things that accelerate it. You cannot eliminate it. You have a lawyer who is actually good. You pay a retainer.
You've had one conversation about what happens if you're arrested that was not recorded and did not officially occur. You sleep in a house that has no connection to your organization in any documented way. The house is comfortable. The comfort is not entirely comfortable.
Level 7, the financier. You don't run an operation. You fund them. You are the source of capital that flows down through operators and book runners and street lenders to the borrowers at the bottom. Your money makes the whole machine possible. The interest that machine generates comes back to you as a return on investment, minus the costs at each level below you. You are a private equity fund for illegal lending. The underlying mechanics are identical. You may have legitimate wealth that you are growing through this channel. Wealthy business people, property developers, even legitimate financiers who have found that returns in the shadow lending market significantly exceed anything available in regulated markets. You do not manage the operation. You do not know the borrowers. You maintain careful, deliberate distance from everything that touches criminality directly. Your relationship with the operator below you is a financial relationship. Capital in, returns out, periodic reporting on performance. You ask no questions about collection methods. You ask no questions about how the operation remains compliant with... You actually stop that sentence before it finishes, because compliance is not a word for this context, and you know it. You are harder to prosecute than anyone below you because your involvement looks, from most angles, like private lending to a business. The operator you fund has a business on paper.
The money you provide is documented as a loan or an investment. The returns are documented as repayment or profit distribution. The underlying business those funds are actually deployed in is several layers of structure away from anything you can be directly connected to. You have done this for years. The returns are excellent. You think of it, when you think of it at all, the way comfortable people think about uncomfortable things that benefit them. Briefly, then not at all. You have other investments, legitimate ones. You sit on charitable boards. You donate to political campaigns. You have the social profile of a successful private financier, which is what you are, with one significant asterisk that your social profile does not include. Your money is the blood of the system. You will never collect a debt. You will never knock on a door. You will never see the face of a person who borrowed from a lender you funded. This distance is not accidental. It is the entire product.
Level 8. The architect. You are not in the loan sharking business. You are never in the loan sharking business. You are in several businesses. A property company, a financial services firm, a holding company that owns pieces of other holding companies, registered in jurisdictions you chose for their privacy laws and their flexible definition of beneficial ownership. Somewhere inside that structure, capital flows into lending operations. Not directly, through 3 or 4 layers of entities that each have a plausible, legitimate purpose. By the time the money reaches an operator on the street, it has passed through enough legal structures that connecting it back to you would require an international forensic investigation with full cooperation from multiple governments, some of whom have reasons not to cooperate. You designed that structure. Or you hired people to design it, lawyers, accountants, financial engineers who ask specific questions and don't ask others. They know enough to do the work. None of them knows enough to be dangerous. You attend conferences, not criminal ones. Finance conferences, property investment summits, the kind of events where successful business people discuss legitimate topics in nice hotels. Your peers at these events know you as a successful operator in the formal economy. You are a successful operator in the formal economy. That is not false. It is incomplete. You think in systems. The specific suffering of a specific borrower is not a thing you encounter or think about. The return on a tranche of capital deployed through a lending network is a number in a model. You manage the model. You are genuinely wealthy, not in the way that requires hiding or explaining. Your wealth is documented, taxed, invested through visible channels. The portion of it that originated in the shadow economy has been processed so thoroughly that the origin is archaeological, technically traceable with extraordinary effort, practically invisible to any ordinary scrutiny. You are 72 hours from disappearing if you need to. You have made arrangements. You have not needed them. You hope you won't, but you are not someone who relies on hope when preparation is available. Somewhere right now, a person is doing the math. They need $800. The rent is 2 weeks overdue, and the landlord's patience expired last Tuesday. The bank said no. They said it politely, with a reference number and a pamphlet about improving credit scores, but no. The family members have been asked. Someone mentions a name, a guy who lends, doesn't ask questions, has the money today. Today. The person thinks about the interest rate for a moment, and then stops thinking about it, because the eviction notice is specific and the interest rate is abstract. They borrow the money. They have just entered the bottom of a system that was built at every level on the certainty that they would.
The man who designed the capital structure in a glass office building never meets them. The operator who manages the network in their neighborhood never meets them. The book runner who tracks their lender's performance never knows their name. The street lender knows their name, knows their kids' names, will be at their door on Friday. The system works this way by design. Every level insulates the level above it. Every level is funded by the level below it. And at the very bottom, a person needed $800 and couldn't think of another way. That's where it starts. That's where it always starts.